to this wonderful ecosystem panel of Technoviti 2022. I am really honored to have Jill, who is the board member and managing director of Global Impact Fintech Association. Jill, welcome to Technoviti.
Thank you, Babu. Hello, everybody, and I'm honored to be moderating this panel today. To kickstart, I would ask everybody to have very quick introduction, like maximum 30 seconds. Perfect. Maybe I ask Malik to start with your introduction.
Hi, Jill. Hi, Babu. Hi, everyone. Glad to see so many familiar faces here and to share the panel with everyone all over again. So my name is Malik, and I'm the co-founder and global board chairman of the Global Impact Fintech, or the GIFT Forum. And it's great to see at least 3 other GIFT colleagues here today, apart from Babu. I'm also the co-founder and chairman of Innovation Labs, which is a global fintech consulting company. And I'm also a professor of fintech at the Asian Institute of Management, Manila, and another university in Europe. Thank you.
Thanks, Malik.
So I'm David Yuri, and I'm advising and training bankers all over the world. In the past 10 years, I have been working in over 50 countries. And this journey of digital transition is extremely exciting, somewhat challenging. And I am looking forward to this conversation because ecosystem strategies are very important. And actually, digital transformation strategies linked to ecosystems are the most complex, most sophisticated strategies to play. So we are on the right panel. Thank you.
Thank you.
My name is Takeshi Kito, and I'm vice chairman of Fintech Association of Japan. And also I'm part of GIFT Forum as well. And in addition to these activities, I'm also part of some government initiatives, such as regulatory sandbox and international and cross-border data transfers.
Hello, everybody. I'm Deepthi. I'm the co-founder and CEO of Kodo. Kodo is a corporate payments and spend management platform for Indian businesses. We are the most loved spend management platform in India, and some of the fastest growing startups, including unicorns and mature businesses, are using our cards and spend management platform to streamline their expenses across their teams.
Thank you. Mushir, I guess you can go next.
Thank you, Jill, and thank you to Mr. Nair and Banking Frontiers for having me today. I'm the founder and MD of FinStep Asia. We are a venture builder and financial services consulting firm focused on fintech and blockchain. We work with policymakers, fintechs, as well as blockchain companies. I have an extreme honor to be here with my fellow GIFT board members and ecosystem players. I also happen to be the co-founder of the Fintech Association of Hong Kong, besides being on a few other boards. So thank you for having me, and I look forward to the conversation.
Thank you. Thank you very much. I'll do a brief introduction about myself. As Malik and everybody said, I'm part of GIFT community. I'm managing director and a board member, and it's such a pleasure to be part of this ecosystem and work with these amazing experts. And GIFT is doing a fantastic job bringing different industries together and leveraging knowledge. So I'm extremely pleased to lead this panel today with you guys and have this insightful conversation. So my first question would be, like, since we're touching ecosystems, right? And this is, as David mentioned, is one of the most critical parts in digital transformation. What kind of new ecosystems are emerging for corporations among fintechs, and how are global fintech associations aligning with each other to create larger and purposeful ecosystem? Just on the broader side, and we can go into details. Maybe I hear from David, since you already mentioned the importance.
All right. So basically, there is a beautiful synchronicity, a beautiful parallelism between the winning strategies for banks and fintechs themselves, as well as the winning strategies for nations or associations or ecosystem builders. Why? Because the 21st century is the century of data, and every good ecosystem is built around positive data synergies, putting data and data together. I know him, she knows her, and he and her can beautifully cooperate. This is, for example, about information, so to speak, data. Or I know the spending patterns of a client. I'm now going to the bank level in a mobile wallet from the 50 cent to the $500 spendings. And based on this, I can offer targeted insurance, investment, savings, or credit products. That's data synergy. And that's how we are building 21st century ecosystems. So when a financial technology ecosystem, for example, the World Fintech Association, is building its own ecosystem, we in fact do the same what our banks, our fintechs themselves want to do. This is a beautiful parallelism, and it's all revolving around data synergy.
Thank you, very insightful. Malik, maybe you can continue on the role of the associations in this process of forming new ecosystem.
Sure. I'll wear my dual hats when I'm answering this, and let me start with my professor's hat. So when I teach in the class, I usually say that the 5 key forces in fintech are the ABCDE, and usually ABCD refer to technology forces. So AI, blockchain, C is cloud and crowd, and D is usually data and big data. But I say the E of that, to my mind, is the most important, which is ecosystems, because in today's day and age, technologies are becoming far more easily accessible to all fintechs, to all banks. What is accessible to a unicorn is accessible to a startup as well through the cloud and crowd ecosystem. And therefore, ecosystems become important. My understanding of ecosystems is quite simple, Jill, and this is really what drives us at GIFT as well, the very ethos, which is fintech as an industry cannot be a fragmented, cannot have fragmented players, be they fintech startups, be they banks, be they regulators, be they central banks, or be they, the talent part of it. This all has to come together if this industry has to survive, thrive, grow, scale up, and really be transformational. And that is where the idea of fintech having moved beyond 1.0, which was really about competition, to 2.0, which is about collaboration and cooperation. And in fact, now we are going into the era of fintech 3.0, which is really about open banking, open finance, and DeFi, decentralized web, decentralized finance. So all of this means that more and more players have to come together, work together. There are many ways in which it gets done, and I guess we'll discuss this in more detail in the panel. But essentially, this works on the premise of the 3 opens, as I call them: open data, open source software, and we are in the early days of all of these yet, and of course, powered by open APIs. So I think this is what ensures ecosystems to get together. And then, of course, there is also the question of global knowledge transfer, which is what GIFT is doing across 70 odd countries with ecosystem stakeholders, and the idea of supporting more and more emerging ecosystems as well. So that really is how ecosystems work together. And it's not, to my mind, just about the fintech associations or the blockchain associations coming together, but all the stakeholders coming together. So the regulators and fintechs coming on the same platform, fintechs and banks coming on the same platform, and actively engaging and talking. Otherwise, we will always have these scenarios where we like to complain that regulators are perpetually trying to play catch up. That is only because the ecosystems are perhaps not tuned for such ongoing conversations. Thank you.
Thank you, Malik. I do want to hear first on this from Deepti.
Thanks, Jill. Yes, I mean, as a fintech startup, we have benefited quite a bit from the flourishing fintech ecosystem in India. I'm myself a part of a few groups here, and given the collaborative nature of the environment right now, where we have to work with banks and credit bureaus and data providers and infrastructure, payment infrastructure companies, you cannot but work within that ecosystem. And given the fast changing landscape, be it around data and around access for various players. And given that we are at the edge of regulatory environment, if not within it entirely, it's so critical to be a part of and be up to date as to what's going on, what are the risks that the ecosystem might be exposed to, and what are the best practices that some part of the players might be adopting. That kind of osmosis of information and coming together is super critical for any business to succeed in this space right now.
Thank you. Takeshi, what is your point on this? And especially if we look at fintech as embedded industry in any other industries, right? So
yes, I'm totally agree with what Jill said. And initially, Fintech Association of Japan was established for financial industry or tech industry. So most of our members from financial institutions and the fintech startups. But recently, many fintech solutions are embedded to other industries and solutions. So now we have many of non-financial companies such as real estate, e-commerce, or mobility. So yeah, I think the ecosystem is getting more diversified.
Thank you. Mushir, what's your point of view on this?
So I mean, the point you've made on big tech is quite pertinent, because you are coming in from an ecosystem where big tech companies were relying on their broader ecosystem, but also regulatory elements, right? Where they were not really as tightly regulated as, say, the banks were. So which was a bit of a handicap for some banks to do what some of the big techs could do, because there are no applicable regulations for them, but the banks were already governed. What we've now seen, especially given the recent crackdown, if I can use the term, refining of regulatory approach in mainland China, especially targeted towards the big tech companies, is that there's that change in approach, and all regulators appreciate and recognize this. All major global regulators have also spoken about how big tech have influenced business models. So going forward, I think there's not going to be this question of big tech or financial services or fintech startups. I think all the models are going to compete at almost the same level. We now have business models which are platform driven and technology first, and those who are legacy, more in-person or old tech people are also switching towards platform first model. So I think it's just a matter of time before everybody moves towards it. It's going to be a challenge. It's not yet solved. It is moving towards the right space, but we probably another 5 to 10 years from achieving it. And ecosystem players, the enablers, are going to play a big role in ensuring that this movement is accelerated. People are used to a different platform experience right now, and banks and others have to move towards it, while big techs have to scale down a little bit, given multiple regulatory approaches, both in Asia, but also in the West, etc., where they are looking to curtail or significantly regulate big techs. Thank you.
Absolutely, thank you. And as you mentioned, the consumer is so much more educated today. So I would like to welcome Mr. Oluwasan. And please, if you can introduce quickly yourself and give your opinion about the ecosystem involvement of fintech and the role of associations in this process. Thank you.
Awesome. Good day, everyone. My name is Oluwaseun Adesanya. I sit on the Council of Fintech Association of Nigeria, which happens to be the fintech umbrella body for all fintech players and financial institutions. This was led by one of the visionaries who believed that there should be an umbrella body that advocates the interests of fintech players and also facilitate collaboration within the ecosystem. The good news that I'm bringing to everyone globally today is that I think Nigeria is far, far ahead of many, many countries. What we've done has been tremendously of great impact. First was the fact that we realized that it was difficult for financial institutions to continue to compete with fintech. So we were able to come up with a framework that make those two players realize that they are brothers of the same mother, and they find a way of complementing themselves. At the beginning, it was tough, but with awareness, with advocacy, with engagement, there has been a strong industry that have realized that the way to go is collaboration. So in Nigeria, as we speak, the fintech players also have financial institutions who realize that the only role of a financial institution is money management, credit, and also being able to hold your funds. But we can't play in that space that fintech that is led by innovation, that is led by emergency or needs of the ecosystem and play with. So there has been that marriage. And the association has played a very tremendous role, apart from the fact that there is continuous engagement, is also the fact that we've been able to become an advocate even with regulators. The truth is, the regulators actually at the beginning didn't even understand the role of fintech. So there were various policies being enacted without a clear understanding of the role of fintech. So association has come to bridge that gap in providing the insights to regulator to guide them in policy formulation, in policy monitoring, in also policy execution and also policy evaluation. Meaning after you have even enacted a policy, you also need to evaluate the impact of that policy. And believe you me, like I said, I'm proud to say that I think Nigeria is far, far ahead. And I will give you a practical example. For the last 8 years in Nigeria, there is no federal, no government agency has issued out check, have opportunity to write any check. Check has been taken out completely from public sector because of fintech. So a financial institution in a fintech player in Nigeria provided an end-to-end payment processing and collection processing for government entities in Nigeria. That tells you how advanced we have been. And believe you me, we are also open to be able to share this knowledge across the group, yes, so that everybody can grow together and create a better environment where we could plug in and play, even for open banking and the rest. Thank you.
But I really want to hear from the global point of view, but also in the regions that you are operating.
Also, what we've done in Nigeria is the fact that we believe that there is a need for a platform like this where we can share knowledge together and also being able to take the lesson from one ecosystem to take to the other ecosystem. The truth is, if we all grow together, the ecosystem will be much more beneficiary to everybody. So someone can be in India and I can make a payment, and I believe that the payment will hit the account at the go. Now, to the other question you answer, we've been talking about the role of financial fintech, digital platform for a long time. But guess what? Pandemic became an opportunity for that information awareness to be embraced. People were locked down in Nigeria for close to 24 months, and they needed to make order. They needed to buy things. Guess what? It was difficult because a lot of people had to queue at the banks that opened their branches. And if you see the queue, it was long. That was why people started realizing that, you know what, we can even adopt the USSD as a channel of financial services. We can even do mobile app. So in case you don't have mobile app, why not just ride on the telco? And that has really, really helped a lot. So adoption has increased tremendously as a result of global pandemic. And now people start realizing that this is the way to go.
Thank you. I want to ask David, because now a very important point has been mentioned, which is a payment culture within different geographies, right? So many cash-driven societies are now digital. So like, is it also triggered a regulator to be more agile?
Okay, regulators are one step behind, but this is not their fault. They have to focus on major incumbent potential risk factors, and they are doing that. Large banks are better regulated, globally speaking, than ever in human history. Risk consciousness, proactive risk management is more advanced in terms of traditional banking than ever in history. Is it enough? No. We need even more sophisticated regulations for major well-known potential risk factors, but regulators around the world are focusing on this. Basel III, Basel IV, Basel V, and these are more and more sophisticated regulations. In fact, the level of sophistication in terms of mathematics, risk management, and modern finance is growing exponentially. Well done. But meanwhile, a totally new universe, let's call it an ecosystem of potential risks, has risen. And actually, one of my best-selling training programs globally currently is about financial technology-related risks, because these financial technology-related risks are now on the level of 5 to 10 trillion, not billion, trillion US dollars. Of course, this includes the entire crypto and indirect crypto universe. So regulators sooner or later will have to pay more attention to this. Let me please mention three other things very briefly. Digital convergence. My amazing colleagues mentioned that companies from new industries, different industries, all of the sudden are appearing within financial services. This is the phenomenon of digital convergence. Digital as a phenomenon melting different industries together. First point. Second point, there is a concept called co-opetition, which is the coexistence, mixture, parallelism of competition and cooperation. And previously, all major industry level transition efforts in banking globally have been born out of co-opetition. SWIFT is a cooperation of otherwise competing banks. My third point, in regard to my amazing colleague Oluwason from Nigeria, cashless society. So countries which were in the past considered somewhat less affluent or somewhat less developed in terms of innovation, financial services ecosystem, are jumping forward, leapfrogging forward. And this is a very important jump.
Thank you, David. I want to ask Mushir to continue on this.
I think just building on what David said, right? On one hand, yes, banks are have been the most regulated till date, and regulators have been focusing on financial stability, right? When you look at percentages, what is changing now is regulators have realized you cannot apply the standard regulations that they use for banking to fintech and say digital assets, applications and business models, because they are very different, because they're technology first and technology native, whereas a majority of traditional business models were non-technology native, right? So they were more manual, they were more about in-person interactions. So, talk about staking, yielding, newer products that come out through smart contracts, etc. on the digital assets is not easy, right, to regulate. So they have moved from a prescription base where you would describe exactly what needs to be done at almost every step of the customer journey and interaction, to a principle base, right, which says, okay, you need to ensure there is enough KYC, rather than saying we can only do KYC through paper, in person, etc., etc. Now it says, here's your risk base, this is what needs to be done, or once you're onboarded, what do you need to do, etc. That makes it easier, not only for fintechs. Quite often we feel when regulators are introducing newer regulations or enabling digital models, that this is helping only, it's more beneficial for the fintechs. Actually, on the contrary, it actually helps up the banks ease up and transform their applications and onboarding. Like in Hong Kong, we're seeing more and more banks shut down their branches and move to digital, right? And in this, I think it's a big role that associations play, right? I think that's a very important role that ecosystem players have, is to provide real-time feedback to regulators to understand what is workable and what's not. And it's not about naming and shaming and and abusing regulators at some in some instances, very rare, but a lot of people are like, oh, the regulators don't care, they're not doing anything, this whole thing is destruction because the regulators are not up to it. We have to be conscious of the fact that a majority of regulators are either from a legal background or a pure finance background, right? And if they don't understand a technology, you cannot expect them to immediately regulate, because laws can, in some cases, take 1 or 2 years to be changed in parliamentary systems, right? So if you need the regulators, you need to educate them, and you need to do workshops, you need to bring in the ecosystem. And that, I think, is very vital role that associations play, is talking to policymakers, advocacy, but also enabling education for them to understand what's happening so they can be faster, they can take more educated decisions. Many are hiring more people with technology background, but that's not going to be universal. So we need to help the regulators and policymakers end to end. Everybody on their payrolls may not be involved with policy, but they need to understand how these business models are changing. And that's a role that ecosystem players need to play very critically. Thank you.
Do you think regulator is consistent? Because you see so much differences, and so, as David mentioned, that they are just learning, but is it helping big tech and fintech to scale up and go to next level, or is it a bottleneck? And how can we like glue this and also narrow the gap in different geographies when it comes to developing countries, developed countries? Yeah, what's your opinion? And then I also want to give Takeshi and Malik the word on that.
Let me add some example what other players mentioned. Yeah, actually, yeah, we are also very keen to support regulators and educate the regulators. And for example, the negative aspect of this COVID-19 pandemic, a number of financial crimes, frauds, and the cyber attacks are increased. So, but we, fintech companies and financial institutions, have data and evidence. So we share this data with the regulators and support them to draft new guidelines or new regulations. So yeah, I think this kind of data and evidence-based policy and regulation making is quite important. So I think this area is one of the key challenge to create a new regulatory frameworks together with regulators. And of course, we can share the evidence and the facts from other countries. So Fintech Association and I think GIFT community can share more data and evidence to our domestic regulators and to ensure interoperability between other communities and jurisdictions.
Thank you.
So the excellent points made by David, Mushir, and Takeshi. I'll just add to them, and I wholeheartedly agree on everything that they've said. And we had a very extensive discussion around whether it is time to move away from entity-based to activity-based regulations, from prescription-based to principles-based regulations, as Mushir said, and proportionality of regulations. I think that David also mentioned. There are situations or contexts where you don't want to hamper the industry, so therefore you keep it very regulation light, or you introduce something like a sandbox for control, but let the industry flourish. And then once it becomes fairly meaningful, as Mushir said, as we've seen in the context of China over the last 18 months, then you really try and bring in a full slew of regulations. And what is important to my mind, as I have been tracking these developments in China, is that one of the subtexts of what they told Ant Financial or Ant Group before, after they pulled out their IPO in NASDAQ, was that, hey, you have to restructure yourself as a financial holding company, which means that you have to now be regulated at par, including in terms of capital requirements. So David spoke about Basel II, Basel III. We spoke about tier 1, tier 2 capital, and I've been a banker like him for most of my life. So these are things which bankers really reinforced after the 2008, 2009 GFC. Now, perhaps after 15 years or 13, 14 years of that, we are coming to a scenario where the largest of the big tech firms will be regulated or governed the same way, while regulators, as banks, while regulators will continue to give leeway for innovation to thrive. And trust me, I mean, whatever we may say about regulators, if any of us were put in that position, it's not an easy balancing job to do, because you have to manage systemic stability on one hand, you want to foster innovation and the growth of innovation on the other. And you also want consumers not to be, you don't want to create monopolistic situations as we are seeing in the case of China. It's like a juggler. I give the example of a juggler. You're juggling multiple balls. It's very easy to drop a ball. It's very difficult to juggle 6 balls together. So this was a personal example. And I'll come to my second part of it, which is where, as we heard from Takeshi, as we heard from Mushir, Babu, this is where organizations like GIFT or the fintech associations come into play. And as David said, regulators are, you can say 1 year, 2 years, whatever behind, depending on which part of the world they are in and how one-minded they are. I believe ASEAN regulators are far more open-minded than perhaps their European counterparts. But one of the ways in which they are actively trying to bridge that gap is to have a dialogue with entities like GIFT or Fintech Association of Japan or Fintech Association of Hong Kong and so on and so forth. So they are taking proactive steps. And it's not just a dialogue, perhaps there is a role for the industry to come together with the regulators, and not just cooperation in terms of cooperation between big techs and fintechs or banks and fintechs, but I would also say regulators and the industry in terms of creating self-regulatory organizations, because as David and Mushir said, bankers know more about this thing than perhaps regulators do. Fintechs know more about what they are doing in terms of innovations, but they may not understand certain nuances of regulations or policies. Let's say in the case of DeFi, we've seen these gray areas where organizations claim they are licensed, and we saw this one example, I shall not name them, in the US, but when they got into the staking business, then the regulator came and said, SEC came and said, hey, that's not what your license was for. How can you go into the lending business? Yours was a securities license. So there are a lot of these gray areas, and this is where I strongly believe, and I'm a big proponent of organizations like GIFT or the various fintech associations playing the role of some sort of a bridge in terms of a self-regulatory organization, because there is no 100% knowledge existent in any of the ecosystem stakeholders at this point. The blockchain founders and their companies understand. It's like, there's a story in India or whatever, it originated in the UK about the 5 blind men and the elephant. And very quickly, if I may add, the story goes something like this. There are 5 blind men and they go to a jungle in India and they are able to touch an elephant. They're very keen to see what an elephant is. They've heard so much about it. So one guy touches the trunk and he says, wow, the elephant is like a big snake. And the other one touches the tail and says, now I understand, the elephant is like a rope. The third one touches the side of the elephant and says, oh, I never realized the elephant is like a wall. So this is really where we are today. It's like 5 blind men in the elephant. Each one of us is seeing parts of it or seeing it in terms of how we see it. Unless we have this cooperation between all parts of the ecosystem in a way that we can foster self-regulatory organizations. And again, I'm saying this, I cannot emphasize enough, self-regulatory organizations, even though they may not be deemed as official, continue to play a very important part in terms of both dialogue as well as in terms of ensuring healthier ecosystems. Because otherwise what we've seen, and I'm sure Mushir here agrees with me, for those of us who've been in the crypto space for long, it's either you self-regulate or the industry gets a bad name, and then the regulators usually come down with a heavy hand. So it's best that you take them along in the growth of this thing, and not just in terms of trying to be safe, but really having a proactive dialogue so that everybody understands each other and we don't end up like the 5 blind men and the elephant. Thank you.
Thanks, Malik. Very interesting points made. I want to ask Deepti for her opinion before I move to some follow-up questions from Malik's conversation. Deepti.
Yeah, I totally agree with what Malik said in terms of the regulator juggling so many balls, and I certainly don't envy their job. It's a tough one. But I do feel sometimes, given that we are as a fintech startup, and also let's say in the crypto world, people are pushing the boundaries of what is possible and what's not. So sometimes we do feel that the regulators can be a bit more prescriptive. But I think our job, and I think associations like these help in that, is to proactively engage with the regulators and put forward the self-regulating practices that we might ourselves are practicing to build that confidence.
Yeah, thank you. What do you think is the role of associations in funding right fintechs and producing more unicorns? Like, are we doing enough, or what's there? David, maybe we can start with.
I think associations are trying their best, doing their best, but on an aggregate global level, we are not doing enough. But I would put it in a positive way rather, because really we are sitting here with good will and good intentions, all of us, it's obvious. So I would put it in a positive way. There is much more space to cooperate, to create value together. In fact, I think currently financial technology associations cover around 5% of the potential value to be covered. So we have another 95% to go ahead to contribute more. And I want to go back to this regulator versus bank versus fintech story. So what I see, and this is a simplified model, tiny fintech startups are looking up to a little bit more mature fintech companies, later stage fintech companies, for guidance on what is okay to do, what is not okay to do. These little bit more mature fintech companies are looking up to credit institutions, i.e. banks, regulated licensed banks. Regulated licensed banks are looking up to regulators. Regulators often work together or are included or are looking up to central bankers. I also work a lot with central bankers. And actually, Malik mentioned that regulators are very open-minded and very, very much trying their best. I can tell you, there is only one category statistically who is even more open-minded, and that is central bankers. It's counterintuitive, but when they come to my training programs, they are the most supportive people. It's unbelievable. Like, whatever innovation I am talking about, central bankers are super excited. We would expect the exact opposite. So what associations can do, that instead of this hierarchic looking up to type of thing, to bring all of us to a more horizontal platform. You know, I want the best expert of Bank of Japan, which is an amazing organization, to talk to a small fintech startup from Nigeria. I want the small fintech startup from Nigeria to talk to a regulator in the UK. I want the regulator in the UK to talk to a technology giant entering financial services in China. Okay, I'm just making these specifics up, but when this happens, then the world will move into a better financial services ecosystem as a whole.
Thank you, David. I think we analyzed the past and we assessed a lot status quo, and we came to what is future, like kind of playbook of associations working with regulators and fintech. How do we get there? Like, any final takeaways? Mushir, maybe we can.
Yeah, that's a massive challenge. I think David made a very good point about central banks being quite open, right? As many of us on this panel, we work closely with a bunch of regulators, not just in the jurisdiction we are based in, but overseas as well. And that is very true. A majority of regulators are fairly open to innovation. So I think step one is you're seeing innovation challenges by the likes of the GFIN, which is a Global Fintech Innovation Network, which is driven by central banks across the world, led by FCA in the UK and others participating. So I think one, we as ecosystem players can try to promote that and support that. Number two, I do believe that there've been a bunch of different initiatives like in ASEAN, where we've done, ASEAN plus Hong Kong, etc., where there was a collective coming together of associations to discuss strategies or discuss about ecosystems. I do believe that now, as we see the world reopening slowly but surely across Asia in particular, most of us are here in Asia, it is taking a little while, but once international borders are free flowing towards the end of this year to early next year, I think there'll be a lot more opportunities to meet in person in different fintech weeks to collaborate. But more so on a concrete level, I think it's probably important for the associations to come up with a list of important cross-border regulatory issues that they face for their local companies when dealing with others. And as then collectively put it forward to other associations. And if there is synergies or there seems to be similar issues faced, let's assume KYC or recognition of identity, I think bringing all of them on the same platform is going to be difficult on an international level, but a local level that has to be at the heart of an association's focus, right? Which is regulations in financial services are the most critical element, I would say, even beyond business models, because business models keep evolving. And if you don't have enabling regulations, that can be a big hurdle. So if that's at the heart of it, then associations should organize regular meetings and workshops where they bring all the ecosystem players, which I mean the corporates, the regulators, the fintechs, and the consultants, others together.
Thank you, Mishra. Oluwaseun, maybe we can hear from you, since Nigeria is very advanced in this space.
Okay, so my take will be, first, we need to understand that all stakeholders have different interests. And if you are looking at collaboration has to start from aggregating interests together. So take, for example, there are entities that are of global brand. Take, for example, the Bank of International Settlements, which is a platform that aggregates all the central banks of the world together. That is a strong institution that could be an aggregator where the fintech interest group can plug together. Then we have other entities like that. We have other platforms like that, but it must be from interest driven. So fintech players who actually have their interest, association who actually have their interest. And I believe the step has started. This platform is a confirmation that we're actually on the right track. So imagine if there is subsequent engagement, and in those subsequent engagement, we are bringing other interest groups into this conversation. Gradually, we are birthing a movement where we then realize that this platform becomes a credible platform for every stakeholders to have their interests expressed and to see how we can have a further collaboration. Again, like other speakers have said, everybody have the area of which they are looking at, especially when it comes from fintech. But guess what? The fintech has come to stay. Digitization has come to stay. This is the future. And all we need to do is to find a way of how we can embrace that. In Nigeria, for instance, the financial institutions are not seeing fintech as competitors, but they are seeing them as birds of the same feather. The regulators are now giving years more to the fintech because they didn't realize that initially they were protecting the interests of the financial sector, but now financial sector has embraced fintech. So we need to start giving room to listen to fintech players. And that's where Fintech Association of Nigeria, the umbrella body of fintech players in Nigeria, has played a very significant role in bringing all these stakeholders together, working in line with their interests, not without losing the focus of saying this platform must protect the interests of all stakeholders. Thank you.
Thank you. I would like to hear from Ms. Takeshi from the Japan perspective.
Yeah, adding to what other panelists mentioned, I think we will have more collaboration with non-financial ecosystems. So for example, I am recently involved in the data-related ecosystem, so data transfer and the data sovereignty ecosystem. as well as agile governance ecosystem, which is aiming to establish a governance or regulatory frameworks in agile approach. So in coming years, I'm very happy to connect fintech ecosystem with these kind of non-fintech, non-financial ecosystems to implement more and more innovations in the world and promote, say, more collaborations with among these kind of fintech and the non-financial ecosystems.
Malik, I want to hear from you, and also maybe on final round, like if you have one next step, what would that be for the associations locally and globally to bring this all together?
As I have seen and observed, and what we are trying at GIFT, there is no one size fits all. And I'll give a couple of examples to substantiate it. Mushi spoke about passporting, and it really depends, right? A lot of what we call about fintech ecosystem collaboration of policy is always going to be a function of socio-political or socio-cultural trends, or sovereign kind of requirements or policy, the larger policy direction of a country at that particular point in time as well. We cannot forget that, and these things do not exist in isolation. So when we talk about passporting, it's not a challenge at all in the EU, because that's just how the EU has been structured, and everything around it is based on a common market. So passporting of financial services or license automatically happens. But if you bring this to another similar economic bloc, for example, which is where I am based, which is the ASEAN or the Southeast Asian countries, the 10 countries, they have a much older economic bloc than the EU for about 50 years now, but it's not as tightly integrated, and therefore passporting does not happen. Yet, when it comes to socio-political relationships, most of the ASEAN countries get along very well with each other, and they are constantly thinking about deepening ties or opening up such barriers to trade and free entry as well. But I've been hearing this for the last 10 to 15 years about banks being able to freely set up in each other and so on. And so it takes time. So it's a function of, even though the socio-economic or the socio-political relationships are very healthy amongst these players, and there is a lot of bilateral and multilateral trade, that's just the nuance of this particular part of the world, this region. But there are things which happen within that as well. I don't think there is a global, we can live in utopia with such global collaborations. While we may talk about BIS or FATF, etc., it's not as easy to accomplish it. I would probably see more activity happening in perhaps specific areas, specific initiatives like these, or open banking. Mushi referred to it. There is APIX, which is there in ASEAN, and which is trying to bring together some stakeholders together through API. So what may work in the EU may not work in ASEAN, and otherwise what works in ASEAN may not work in North America or LATAM. So we have to try. Would like to conclude by saying that there is a lot of inter or intra-regional cooperation which is happening amongst players, and I think as long as that continues, it can organically lead to more such global collaborative initiatives. Thank you.
Thank you, Malik. I think the key words from our discussion is collaboration, right? On the other hand, we also all realize there is no one step for any region or globally, and also seeing different kind of risks that are emerging from geopolitical to cybersecurity, right? But those are also critical while transitioning to open banking and open data ecosystem, because data is becoming the new space, and data, metaverse, digital payments, new generation that prefers completely different preference and investment portfolio in terms of digital assets. Those aspects are becoming more and more crucial, and I think more and more collaboration would be very useful also to work with regulators. So it was my pleasure moderating this panel. Okay, thank you very much, and I wish everyone a good day. Thank you.
Bye-bye.
Thank you very much, Jill, for making it a real, very, very insightful moderation and a very, very inspiring set of sharing by everyone in the ecosystem. Thank you very much.
Thank you.
Thank you.
Thank you.
Thanks a lot.
Thank you.
Bye.
Thank you.